There's one part of the sale that makes or breaks the difference in whether or not you're actually going to close the client, how much premium you write, and how consistent the client stays on the books and you keep your persistency high. In this video, I'm gonna be breaking down exactly what that is. My name is Trey. I'm the owner of Agent Lead Lab. In the past 4 years, we've helped over 550 agents issue pay $40,000 per month. And on this channel, I talk about the strategies, tactics, and behaviors that you can go out and implement in order for you to hit your best month. So as always, please make sure to like, comment, and subscribe, and let's hop right into the video. So here's what I've understood, know, and realize is the common denominator between agents who do really well and agents who do not really well once they get on the phone, right? So specifically what I'm referring to is when a client is engaged with the agent, right? And you're having conversation, what determines how much you write, meaning what the premium amount, if you close them or not, and if they stick, and it's the why. This is the most complicated and misunderstood part of the sales process that I hear with every single agent, right? If you are just simply thinking that because they filled a form out, whether it was aged or fresh, and they got on the phone with you and they said yes that they filled it out and they answered their pre-qualifying questions, that you are going to close the client, you are sadly mistaken. Unfortunately, what I've realized is that if you don't figure out what their why is, the saying is no why, no buy. So if you don't actually figure out what their why is, you are not going to close them. And if you do close them, you're going to close them for a smaller amount, right? And then you're also going to have an increased likelihood of them charging back or getting a policy flipped because you haven't built a reason why they should keep it, what it does for them, and what it looks like. So let me walk you through what that is. So after you do your intro, and after you maybe do a few pre-qualifying questions, potentially even medical questions, you need to get into, John or Susie, what made you fill this out? Well, I was looking predominantly for something to protect my final expenses. Okay, yeah, it makes total sense. Now, when you say protect your final expenses, you listed, Jane as your beneficiary here, John. So I'm assuming that when you filled this out, your main concern was to make sure that Jane had no remaining issues, debts, or outstanding balances and didn't have to take care of any funeral costs. Is that correct? It's like, yeah. It's like, okay, perfect. So outside of taking care of the final expenses, because it clearly sounds like that's the most important thing and we have to get that done. What do you currently have in place? Are you currently like renting or do you have a mortgage? And they'll tell you. And then they say, okay, so I'm assuming, right? You just keep saying, I'm assuming. You ask a question, you probe, you get an answer. That's all you already know. And then obviously you associate that, okay, cool, I have a mortgage, perfect. And just so I'm clearly understood here, John, what's the roughly estimate on that mortgage that you have? Oh, well, it's about $3,000. Cool, so I totally understand. So it sounds like not only are you looking for something specifically that can cover the final expenses so that your wife is taken care of, but also that way she doesn't have to continue to fork up an extra $3,000 that she doesn't have. Is that correct? They're like, yeah, you are creating the reason why they filled it out, okay? Now, one of the things that I learned from one of my guys named Easton Patton, absolute dog, and Zach, they kind of taught us this when I was selling, which is they used to go inside of houses and they like, it was like me. I didn't know how to build value in the why. And I was getting really upset because I was like, I'm seeing all these people in the, at the time it was Slack channel, posting all of their sales, right? And they're just writing really big policies. And I'm like, yo, how are these guys doing this? Like I'm, calling the same, final expense mailers, a few mortgage mailers, and I'm just writing these like baby premiums. And I was watching the video and I was talking to them, we're like, dude, you can't attach the premium amount because you don't have a reason why they should get a higher premium. You're probably like, what does that mean? And this ties into what I'm saying at the beginning of the call and how the why is so important. So what I realized is the reason why they're writing these bigger premiums is because when you're just talking to somebody, you're like, all right, you have your gold, silver, bronze, it's 10, 15, 20. It's like, dude, you're always gonna write baby premiums. But once you fully understand that you need to tell them and you need to show them what that money does. It's tax-free life insurance. This is how it works, okay? You're gonna get a death benefit paid out to you. This is what we're gonna do with the money. So now when you're pitching options, if you go through an example, it looks something like this. You say, all right, Jane, so based on what we talked about earlier, we're gonna go through each of these options, all right? So first I'm gonna have you write out bronze, silver, gold, or option 1, 2, 3, however you wanna do it, doesn't matter. And you can start at the top or start at the bottom. I've heard a lot of people say there's pros and cons to both. I don't really think it matters in the grand scheme of things as long as you explain what the money does. Now, let me show you what most agents do. Most agents will say, hey, gold, silver, bronze option 1, 2, 3. All right, so you got $10,000. That's going to cover your final expense. You have $15,000. That's going to cover your final expense and leave a little bit extra behind. And then you have $30,000. That's going to be your big policy. That's going to cover your final expenses, leave a little bit extra behind, and give you some supplemental income. And then they're like, all right, what option do you want? And then most of the times they just pick the lowest one. And they're literally just quoting people. And then they get upset because there's no real why, so they're not pressing them. Whereas the actual way to do it is if you start it, and I brought up Easton for an example, because if you started at the beginning of the call and what they did is they said, I would set a timer on their G-Shock or on their watch or on their phone for 10 minutes. And I would just ask, I would just be the why game. I would just ask, why'd you fill this out? What happens? What is the situation? Who's gonna have to move? So I got all that information. They built a crazy financial inventory, and then they went into actually explaining how it works, collecting medical questions, and then actually pitching the product, right? And regardless if you decide to set a timer for 10 minutes, the concept was, if I don't have the ammunition, I'm not gonna close. Because I can't at the end say, well, John, this is why you said you wanted to fill this out. You listed boom, 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 boom. So we're gonna get something to put in place. Oh, okay, John, that makes sense. So now I hear what you're saying. So essentially we're gonna look at this option for this option for this option for this. Is that correct? You're not throwing numbers, you're solving problems, right? And now when you're pitching, you're not even talking about the price. You're just telling them, hey, so it looks like we need to get this plan put in place, this plan or this plan, what option? Okay, that option is gonna be this much. Cool, I can't do that. All right, so we're gonna do this, but just understand that you're gonna have to do this. So let me walk you through what that looks like. All right, so you'd be like, John, all right, so there's 3 options here. I'm gonna have you look at option number 3. All right, so let's start there, okay? So it's gonna be your meat and potatoes plan, John. All right, what is meat and potatoes? It just means bare bones, basics, all right? This is gonna cover your funeral and final expense. Now, you mentioned earlier that Sadie, right, didn't have anything in the event that something happened. So John, this is gonna be the plan that we at least have to go with, right? No matter what. Now, I know you mentioned that you wanted to be buried. This is gonna cover the cost of burial up until its entirety based on your state regulated, and this is where you have to be like educated, right? So in the state of Nevada, right, the average funeral cost is about $15,000. So we're gonna get you a $17,000 policy here, so that way it can actually cover and make sure that your final expenses are completely taken care of in the event that something happens, okay? And we're also gonna beat inflation by just a little bit to 100% secure that we can get that taken care of. Now, God forbid you wanted to go like completely all out, you probably wouldn't be able to cover all that with this $17,000, but it is gonna get you a really, really solid funeral taken care of in the event that something happens, so Sadie would be good. Does that make sense? He says yes. He said, okay, cool. Option number 2, right? And by the way, John, I've put all these options to make sure that they fit your budget, right? So we need to pick the option based on what's gonna be the best fit for you. There's 2 ways you can say what I'm about to say. You can say that and wait to the end, let them pick, and then give them the price. The pro to that is that like they pick based off value, not based off price. Now, the con is that if they pick a price that doesn't necessarily fit like their budget, then, or like what they really want to pay, then now you have to start downselling, but now you start removing things, right? So it's really good, but it's a little bit, that's more of advanced, right? The baseline version is what I just said, and at the end you say, John, this option is $98 a month. Okay, can you write that down for me? He says, perfect. It's like, all right, John, so that's the minimum plan that we have to go with today. Does that make sense? Like we have to get that because you already said that this is important, okay? Cool. All right, so the second tier plan, John. All right, so this is gonna be, option 2 or bronze or silver option or whatever word you wanna use. Like, all right, there's gonna be your silver option, John, okay? Now, the way this works is we're gonna make sure those final expenses are taken care of. This is the meat and potato plan, but it has an additive. Now, earlier, John, you mentioned that in the event that something happened, right now you're pulling in about $2,500 a month, correct? He's like, yes. Like, all right, so what this is gonna do is this is gonna give you an extra 3 months of what we call supplemental income replacement. Are you familiar with that word, John? No. Okay, cool. So what that means, and by the way, you probably should have explained this at the beginning part, but I'm gonna explain it here so you guys understand the word track to say. Supplemental income replacement is essentially this, John. What that means in the event that you do pass, right? Obviously you got the funeral taken care of. Okay, that's the meat and potatoes. We know we're getting that today. But understand that on top of the meat and potatoes plan, all right, we have to have something because Sadie is not only just gonna pay for your funeral, what's gonna happen 3 months after you're gone? Well, life still goes on, right? The moment that you pass, she's not gonna have the funeral that day. Okay. And then let's say the funeral's in a week or two and she's still getting things in order. She may be trying to figure out what she's going to do, if she's going to move. And this is where, if you asked why at the beginning, you ask questions such as, John, in the event that she passes, what happens? Okay, so like, let's walk through it so we can actually paint a picture, because I'm going to be the one to make sure I give this death benefit to her. And I want to make sure that I can be here to support her in any sort of way, shape, or form as your licensed representative to show her how to use this money. Okay. He's like, yeah. It's like, all right, so who's coming? Okay. Well, our daughter, Roseanne, is going to fly in. Okay. So do we need to pay for flights? You see what I'm saying? There's so many other things. Now, everything that you need add to it is more money. Okay. So then you say, all right, so this plan, I'm going back to what I'm saying on the close. I'll get back to the initial part. I went a little out of order, but it's okay. Bear with me. So on this plan, what's going to happen, John, is that your wife is going to be taking care of final expenses. That's taken care of. Funerals are taken care of. We're also going to have 3 months of supplemental income replacement. Okay. And the reason why we have supplemental income replacement is because your 2,500 is no longer here. So we wanted her to sustain her normal way of living for at least 3 months, because there's a lot of changes going on. The last thing we want is for her to obviously bury you and then be like, well, I don't have the same amount of money coming in. I'm only bringing in my X, right? And she doesn't have that X, because now her whole lifestyle changes with your income gone. And you guys are on a fixed income. And he's like, yeah. It's like, all right, cool. So like, we need to make sure this makes sense. Like, yeah. It's like, all right. So the supplemental income replacement is for 3 months. Okay. Now on top of that, this is also going to make sure that you have provided a flight for Roseanne, right? Stay, lodge, everything else associated, whatever you want to say, to make sure that she's good and XYZ is good. All right. So this is going to get us in total death benefit about $25,000 of coverage. All right, let's just call it 25. That might be low. 3 times 2.5, 3, 6, 7.5. So plus 17 is 25,000. So it's going to get us $30,000 in coverage. Let's call it 30,000 extra, $2,000 for like flights, hotels, fees, etc. This is going to give us $30,000 in coverage, and your total for that would be $184 a month. He's like, cool. Right? So once again, this plan is going to do this, that, and the third. Does that make sense? Yeah. All right. So then your last option, John, it's going to have the meat and potatoes, everything that's in silver that we just listed, supplemental income, making sure your daughter's good. And this is also going to provide an additional 3 months of, or you could do 3 or 6 months of what we call mortgage protection payments. So it's going to cover your mortgage, or you could call it equity protection, or you could just call it mortgage coverage. 3 months of mortgage coverage and an additional $10,000 of tax-free death. You could just make stuff up. But if you ask the right questions on the why, then that would be that option. And then you would explain what that does. And you would show them, dude, I just took 5-6 minutes to explain a close. Most people are like, that's kind of a lot. No, it's not. If you want to write bigger premium, that's what you do. And guess what typically happens? First of all, worst case scenario, they buy a $98 option, right? For $17,000, which you probably would have not closed if you did 10, 15, 20. Right? Option number 2, they go for the median option, drop 184. You're like, oh my goodness. Yeah, it's pretty simple, right? And then option number 3 is obviously they go for the shebang, and it's like, the biggest policy, right? And the cool thing is, once you start showing them how to spend the money, all you have to do is reverse engineer your closes. So I started writing significantly bigger policies off of that alone, way stickier business, way less chargebacks, because it's actually putting people in the best position and showing them the right options that made sense. It's why I fell in love with mortgage protection once I understood how to do it. It's not an easy sale though. Most people really do struggle with it, which is a whole nother conversation. But you have to understand and paint the picture why. I think the reason why people struggle with mortgage protection is because they think that it's only supposed to cover the mortgage balance in the term, and they don't understand exactly how to pitch it and why it's still important for them to get something. And even if it doesn't cover the entire mortgage, you can paint a picture for what it does, and then you increase the likelihood they stick. Now, let me go back to my initial point. When I said that the gentleman Easton actually showed me or explained how he was going in the house and just sitting down and like sitting there for 10 minutes, it literally will force you to play the question game. Why this? Why this? What do you mean? What is that? What happens? Okay, explain why. Give me context. Okay, I don't understand that. All right, so we're going to do this. Okay, you just start asking questions. What happens if you pass away, John? Well, I don't know. I need this to make sure my family's taken care of. Totally understand, John. And that's very commendable of you to make sure that something is taken, that you have something in place. But let me ask you this question, John, just so I'm clear. So in the event that does happen, what's next? Well, I don't know. Like, okay, well, how much is she making? Because if you pass, is her lifestyle remaining the same? It's like, oh, I don't know. Why you need to know this? Well, John, just being honest, like, obviously we can cover the final expenses. My job is as life insurance, right? So are you familiar with like how life insurance works? No. Okay, John. So essentially it's a tax-free death benefit claim that's paid to you, right? And you can use it for whatever you want. So they call it, it's really tax-free income, theoretically, if you want to call it that, even though it's not necessarily income. And you can use it for whatever you like. Right now, we normally associate it with, because they give you a check, you going to pay for a funeral. But in reality, you can use it forever. So my job is to figure out how can we put that plan together for your family based on not only what you can afford, but what makes sense. Is that clear? Yes, perfect, cool. So then you go through and you just start explaining, okay, well, I need to understand this. Why do you need to know my budget? Well, John, like I said earlier, I need to put you in the best position possible. If I don't know your budget, I can't put you in the best position. I'm just throwing out numbers. And if you want me to throw out numbers, I can literally just send you to a website. That doesn't really make sense. You filled out a form because you wanted to speak to an advisor. You filled out a form because you didn't know where to go on the website. So it doesn't make sense for you to hop in here and think that me just giving you numbers would do anything for you. Because any agent can give you numbers. I want to be the agent that's going to be there for your family. Okay, so why, right? Why? Okay, what? What happens? Who's going to be responsible? Do they have the money? Does Roseanne have enough money to even fly out here? Roseanne may not have enough money to fly to the funeral. You need to sell them life insurance for Roseanne to fly to the funeral, or else Roseanne's not coming, or Roseanne's going in more debt. And you need to explain to them that that's why we're getting this put in place. Then they're going to be like, okay. But they got to respect the fact that you're asking them tons of questions and you genuinely are trying to figure out, why are you looking into this? What happens? And when that happens, that's when you're going to really start building and compounding and start closing at a much higher clip. And you'll have way stickier business. Because an agent can't come behind you even if somehow they get your lead. Let's say like you close somebody and then 3 months later they fill out the form because they think they want to get lower rates. Well, they get on the call with the client and you've built so much value that when you pitch them, you're just like, yeah, it's $10 cheaper. They're like, okay, but I don't get it. Like, what's it do? Like, what do you mean what's it do? It's like, well, what does my policy do? It's like, it just is life insurance. They're like, oh, okay, cool. So like, yeah, Trey, he explained exactly what it did. So you're not really telling me what it did. So like, I'm just not gonna switch. Because I was looking to see if there's a better option. That's like worst case scenario. But a lot of times that's what happens because these people, they've spoken to you and you've painted the picture for what their money does. Like I literally had a lady call me and say that an agent, I haven't sold a policy in forever. Lady called me, this is from 2021, and says, yo, I filled out another one of those ads and I talked to a guy and he said this, and this, but he didn't really explain to me. Can you go through like exactly what I have one more time? I swear to God. And it was literally a final expense lead that I turned into equity protection and closed it. I think it was like $280 a month. And it's like, she still has the pot. But I'm like, the only reason I'm saying that is because the reality is I painted the picture for what the money was going to do. You have to paint the picture. If you can't paint the picture, it doesn't matter. So hopefully this video helps. As always, please make sure that you like, comment, and subscribe, and I'll see you guys next time.